Good morning to my trading family. It's Saturday. It's about 5:30 in the morning. And this is just what you do when you're a sicko like me. You get up at 4 and you jump into some charts. Talking a little bit quiet because the girlfriend is asleep and I don't want to get myself in trouble here. But wow, what a week. So, depending on how you look at this week, and depending on what time frame you look at, you're going to get a different perspective. A 5-minute chart or a 15-minute chart is pretty fugly. A daily chart, this was a good dip. So got the reversion all the way back to the 21. That doesn't hold up. All the way down to the 50. So on a daily time frame, S&P 500, all the way down to the 50-period simple moving average. And check out technology here. Technology really caught the ugly stick this week, breaking below the daily 21 and breaking below the daily 50. So definitely a volatile week. And those daily charts do look a little bit sloppy. Here I think is the most interesting perspective. Take a look at the good old weekly chart. The weekly chart, one of my best friends. I don't have many friends, but the weekly chart is one of them. It does such a good job of tuning out the noise of the day-to-day sessions. So if we just clean up and we take a look at that daily chart from a bigger picture perspective, the weekly chart rather, we got to pull back to the weekly 21 here for technology. So, this is going to be interesting. One of two things I think potentially here. One, this might be the best dip and one of the better opportunities we're going to get this year. Or, if we end up dumping below that weekly 21, it could certainly be a total shift of momentum. Time will tell, and this is kind of what we're going to discuss in the Sunday video, but, hopefully for the majority of us out there, we didn't take too much significant damage this week, and we're mentally prepared and we got enough capital to take advantage of, in the event this is just a dip to the weekly 21, I think this could be one of the best buying opportunities of the year. But we still got to be patient. And for the SPY here, because tech was definitely a little bit weaker than the overall market, we got the pullback to the weekly 8 EMA, and there is a little bit more downside for us to test the weekly 21. But here's what I'm thinking for next week. Early in the week, and though I do think we could see some more volatility, we could see a little bit more downside for Monday, Tuesday, Wednesday. I'm looking for the market to make a nice bounce. So my target here is going to be the 21 period EMA. So for the SPY, it wouldn't be that big of a bounce, but for the Qs, I'm looking for a bounce back up to the 21. So if you're looking at the QQQ futures, that's about 13,300 and change. Here's why I'm looking for a bounce. And while the bounce certainly could not happen, let us think in terms of probabilities. For the same reasons that we want to be really careful about getting long and opening new long positions when we're 2 to 3 ATRs to the upside, is the same reason we want to be a little bit careful about getting aggressively short once the market has already dropped 2 to 3 ATRs to the downside. So you pull the Keltner channels up here, and just like this can be a tough spot to get long because you're fighting that probability that you're going to pull back to the 21, this can be a tough spot to get short. Is you're fighting that probability we're going to rip back to the 21 to the upside. So, of course, we could roll over on Monday, but I am looking for a quick rip back to the mean. So should technology give us a 2 to 3 to 4 day bounce, obviously tech names are going to hold up really well. So we'll talk Amazon Sunday, we'll talk a couple other setups, but one that I did take here at the close yesterday was Google. So check out the structure here. While the market is getting smacked, Google does a phenomenal job of holding up. We get the dip to the 21, and it just sits here consolidating all week. So like any other trade, this does come down to the indexes. If we do get that nice little pop there for tech next week and tech does rip back to its own 21 EMA, as goes the index, goes the majority of the stocks in that index. So I would like to think that Google, should we get a nice bounce for tech, can get something going off that 21. So under the surface, we're sitting right on top of our launching pad because we know most good moves take place off the 21. And you got a beautiful 4-hour squeeze right on top of that mean. So we'll have to see. Market will obviously do what the heck it wants to do, but I think that's an interesting setup. Kind of got timing here for a potential bounce in tech, back up to that 21, with one of the leading tech names holding up rock solid all week in a beautiful 4-hour squeeze that could push it right off of that 21. So that's something I'm taking a look at. I still have my put credit spreads in NVIDIA, got one left in Tesla, and I got all my put credit spreads in Amazon. Amazon was an interesting one this week, but I am proud to report that I think I've sold enough call credit spreads here and closed those call credit spreads for profits that I've covered a majority of the risk on those put credit spreads, which I'm still a big fan of. Short strikes at 3,000 and 3,150. I think once the market puts in the bottom here, you could see Amazon fire higher into March and into April. So there's definitely some good looking opportunity out there. But I think the most important thing that you can take from this week is just a different perspectives that different time frames offer. If you're trying to make a living trading the 5-minute chart, this is some pretty ugly stuff here this week. Looking at a daily chart, and things did get pretty soft, so that's a pretty big breakdown on a daily chart. But from a weekly perspective, this might be the best pullback opportunity of the year, and we haven't gotten a dip to the 21 since back in September, which proved to be an amazing buying opportunity, and then again in November. So what I want to focus on Sunday is just kind of continuing to build our focus list over here of good high probability setups that should provide us opportunity if the market does ultimately, over the next handful of weeks, turn the corner and start heading back towards those highs. So we'll talk some NVIDIA, we'll talk some Google, we'll talk some Amazon. Netflix is another one that we opened up a new put credit spread in this week. So there's plenty of beautiful setups out there. It's just a matter of A, being patient enough to see where the market goes, and then B, being prepared to take action once we get those signals. So what a week we had here. Looking forward to jumping into P&L and all the good, interesting numbers on Sunday. But for now, that is the weekly recap. So I hope everyone survived. Hope y'all kept your head above water. And I'm looking forward to talking to you Sunday, and we'll get into some good detail.